Alright, in this video I'm just going to do an accounting equation overview. Alright, so the accounting equation states that assets is equal to owner's equity plus liability. Assets are things that we use to generate income for the business. Owner's equity is seen as the money of the business. It's mostly income and expenses, and then there are also drawings and capital, where drawings and capital is where you put money in the business personally and then withdraw it yourself as owner. Then expenses and income, that's also part of owner's equity, which there are many examples of. Those income and expenses, it is business income and business expenses. And then liabilities are things that we borrow, money that we borrow to make the business run. Now the reason why assets is equal to owner's equity plus liabilities, if you want to own assets, you can either buy them with your own money, or you can borrow the rest of the money, or you can just borrow the money all the way and then you use none of your own money. But that is why this equation is equal. So it means if it's 10 assets, then if owner's equity is 2, then liabilities will be 8. Right, just remember they don't put in the equal sign here, but that's always something that you must remember, because if this side is equal to, for example, 10 or a plus, and was plus 630 in this case, then that side either must also be plus 630, and it can either be at liabilities or at owner's equity. Okay, so that's how it works. Alright, now in terms of how this accounting equation works, or this side, these T accounts, assets increase on the debit side and decrease on the credit side, which means, let's say it's equipment. If you've got more equipment, you put it on this side, and if you've got less equipment, you put it on the credit side. Okay. If it was, the asset was bank, then if I've got more money in the bank, I put it this side. If I've got less money in the bank, I put it on the credit side, right hand side. Let's look at owner's equity. If transaction that you did, one of those 4 things that I mentioned, income, expenses, owner's equity, liabilities, if the amount is written on the credit side of the T account, it means the money of the business increases. If I put it on the debit side, it means the money of the business decreases. So what will decrease of the 4 that I mentioned? Drawings and expenses. You will put the money on the debit side because it decreases the owner's equity. Whereas income and capital increases the money of the business. And then lastly, liabilities. If you've got more liabilities, more loans, etc., you put it on the credit side and the amount. And if you decrease the liabilities, you put it on the debit side. Now, last part of this overview is, how does these relate to each other? Okay, let's say I look at drawings. I can see I must classify it first. So drawings is an owner's equity account, right? And it's written on the debit side. That means it is decreasing. The value is written on the debit side. It's decreasing the value of the owner's money. Okay. If stationery, which is normally also owner's equity, sometimes it's normally an expense, but now you will see it's written on the credit side, which means it is on the credit side. It means it's increasing the owner. So just take an example. All right. So the drawings part, owner's equity, it's on the debit side, so it's a minus. So therefore the minus over there. And here, and over there, stationery is also owner's equity, but it's on the written on the credit side, which means it's a plus. So therefore it's plus and minus. Plus and minus, 0 will give you plus and minus of the same amount will give you 0. 0 is equal to 0, and so you can just fill in all the rest. So that's just an overview. So we're going to look at all the rest now using the same principles.